What's up guys, what's going on Boske's FX family? I hope you guys are all doing good and welcome back once again to our YouTube channel. We really appreciate it guys to have you back once again here, and also would like to thank you all who just subscribed to our YouTube channel. If you have not yet done so, please kindly hit the subscribe bell and turn on the notification icon so that you will not miss out our next concept when we upload our next video. So guys, in today's video we are going to be talking about smart money manipulation. So if you are new here, we also talk about smart money concept, ICT concept, and order block strategies. If you are looking forward to learn about those concepts, you are most welcome to join the family. So let's say guys, we have this structure here in H4 time frame, whereby the price will create what we call a higher high or a swing high, and also a swing low, or a new higher low when the price is going up. And then they'll go and break this previous higher high, creating a new higher high right there. The next thing which you like to do is to wait for the price to come back to the order block, which will be responsible for breaking the structure, right, which is this one. As you can see, this lower high failed to break this zone, so we can call it a lower high. Then they have given us a rejection, but it also failed to continue going down, then came back breaking the structure. So the next thing which you expect a correction, right, coming back to this zone area, right? And let's say guys, this zone will not hold, and then the price will continue going down. The next thing which you ask yourself is where you went wrong. So today we are going to clear that confusion. So what you have to understand guys, what you have to understand is something like this. When price is going up, they create what we call a swing low and a swing high, which means that everything between a swing low and a swing high is an internal structure. So when price create an internal structure, they'll come and break those internal structure, coming back to the external structure, meaning this zone area is an external structure. So if price creates something like this in 15 minutes, this is our higher high, because that's where the price decided to turn after creating a new higher high, and then they give you a pullback, coming back to this swing higher low, or you can call it a swing low. So when price came back, they'll create what we call a choke, right? They'll create what we call a choke, meaning this is a good order block. The price will continue going up. The next thing which you expect after a choke, you expect a pullback, and then the price will continue going up. So while the price is going up, what you have to understand is that this zone was never being mitigated while the price is going up, but the price can also create these type of zones like this, as you can see, meaning they will leave these zones without mitigated. And what you have to understand is that this zone, they can hold, or they can also be taken out, and then the price will come back to this one, which is our extreme and also external structure, right? External market structure, meaning they can also do something like this. Why? Because this zone was never being mitigated, meaning whenever price is going up or down, they have to mitigate the OB, which was responsible for taking out the structure, meaning this swing low was responsible for taking out all of this swing high here. They have created a new swing high than the previous high, meaning whatever is being created at the middle of a swing low and swing high, it's what we call an internal structure, meaning this is a trading range. What you have to understand is that the price will come also to these extreme zones and then shift the market going up. So it will be something like this. Let us show you now. It will be something like this, as you can see, right? Let me change the color here. Let us put red and dim this one so that you can understand. So as you can see now, if you are in H4 time frame, this is what you'll be seeing, right? You'll be seeing a swing a swing high here, and a swing low, and a new swing higher than the previous swing high. And you can see a reversal, something like this, right? Something like this. And the next thing which you expect the price to come back here. But what you have to understand is that the price can't leave a zone being unmitigated, especially in 15 minutes time frame. They will come and mitigate those zones area, then shift the market, continue going up, meaning even if price give you a push like this will be our swing, let me just highlight a new swing low, and this will be a new swing high, meaning this is our external structure. Now this is our external structure. You are focusing on something like this, meaning this is a internal structure. So you'll be waiting for the price to come and mitigate the zone which will be responsible for change of character, and then the price will continue going up, giving you those continuous moves. So we're gonna show you some of the example which we have been observing these type of moves. So guys, as you all know that now I'm becoming a big fan of these indices like US30 and Nasdaq. And if you have not yet joined our Telegram, please find the link below description, because sometimes we also share some setups and free signals. So this was a break of structure, and we did share this setup in our free Telegram channel. And as you can see, this was a break of structure, meaning we didn't have any opposite candlestick, meaning this was our supply zone area right there. But before we go there, let us explain what happened here. Okay, so as you can see guys, what I want you guys to see is that we had a rally, base rally, meaning this was a break of structure here. This was a break of structure, and what you can see guys is that the price have created a swing high here right there, and this is a new swing low right here, and this is a new swing high right here. But we can also see that we had this opposite candlestick, meaning that was the opposite candlestick which broke the structure right there. So now let's go to 15 minutes chart. So as we are now in our 15 minute chart, we can understand that this was our break of break of structure right here. Break of structure, right? As you can see, break of structure, and this is a swing high here, and this is a swing low right here, right? And you can see guys that before price went up, they created a rally, base rally, because this one failed to break the structure. In this zone area, it was a trading range whereby the price have created an internal structure. So now as you can see, this zone was being mitigated, right? And this zone was never being mitigated right here, right? Something like this. And let's say this is what you see now, because some you'll be trading like on a daily, so you can't wait. If you're not patient, you can't wait for the price to come to the supply. You want to look for what? For sell, for buy opportunity. So what the price will come and do now, they'll come to this zone area right here, right, and then pick the orders and shift the market going up. Meaning, if you like, you can use this zone as your first take profit if price continued, if price continues going down. But if they continue going up, you mark the first turning point as you're seeing what? As you're seeing high. So now let's use this replay mode. Okay, so guys, as you can see now, the price came back to this zone, and you can see they went in to the what? To the order block zone area, because you have to refine it when you are in 15 minutes. And you can see the price. If you are going to take entries, me, I was going to wait for change of what? Change of character, and this was going to be your entry. If you find your entry, and this was going to be your what? Your SL right there. So let us first delete this, right? Okay, and then this was going to be your first take profit, or you can use this zone where your supply zone area is at. And let us use, okay, we can see the price after giving us a change of character, they also come and give us a break of structure, meaning our SL was going to get hit here, right, if we use this order block. So if you use this one, let's see what the price was going to do. Let's say your entries are around this zone, right? If you like to take those immediately entry, right? Okay, we're going to have a change of character. As you can see, the price took out this last lower high. As you can see, there was an opposite candlestick, meaning if you refine, your order block was going to be this one right here, right there. And this was the first candlestick which was created by the what? The deal. So let's say your entries were going to be somewhere around here, right, somewhere there. And as you can see, price going up, and you can see now the price even take out this zone area right here. But remember, in H4 time frame, right, in H4 time frame, we are focusing on this what? On this order block here, and we expect the price to come and take out this low right here, right? Because that's where our what? That's where our last lower low or swing low was created. So the price just came to mitigate this zone and then shift the market going down, right, as you can see. So if price hit your take profit, and now you'll be waiting for shorts around that zone area, meaning sorry about that, guys. So meaning this was going to be your entry point for what? For shorts right here. So let's see if we can have a change of character, and then the next thing which you will do, you now use this zone as your take profit right there, as you can see. So let us delete this, and we can see we have this last opposite candlestick, because when price is going down, you want to look for change of character in 15 minutes, right? So the change of character, you only take those last opposite candlestick, right, after price coming back to your demand or supply zone area. So let's say we're going to use this zone area here, right there. was going to be our change of character, and here we have a break of structure at the top, right? Okay, so now the price took out the last lower high, creating a new lower low. So the next thing is that you are going to focus on on the last opposite candlestick, and you can see the last opposite candlestick was at this top right there, but we can also see that we have a dodge inside that zone area. So we're going to use this at least right there. That's where you are going to use your entries, and this was going to be your SL right there, right? So as you can see, now the price is going down, right? And if you miss this zones area now, as you can see, the price just came back and shifted the market going down, meaning now the price is still on a continuous trend, right? Meaning this candlestick will be your high and the low, so that will be your order block zone area right there. You wait for change of character. As you can see, this zone area, the price have created a rally, base rally, meaning here was going to be your entry if you missed your first entry, and the SL, you use the high of this zone area right here. So let us say your entries were going to be here and your SL above this zone area. Let's see what the price will give us. Okay, we're going to take your entries, and you can see what the price is doing. Came back, but if you have hold your trades and use the last low as your take profit, was going to be smashed. As you can see, they are near our take profit zone area. So if you backtest on US30, some current pairs as well, you'll find it easier for you to understand. So you just have to go and do a backtest, and also you see what we have been telling you. So I hope you enjoyed this video and you have a blessed weekend, guys. Thank you.